Okay, first, because you guys have noticed, pretty much every question I've asked this week, one of you maybe has said, I've heard of that before. Okay? If you feel like you don't understand this stuff, let me show you something that might confirm your suspicion. This Champlain College did a study of what states do a good job of teaching financial literacy, like understanding the Federal Reserve, the stock market, investing, banks. Okay? Here's the map. If you can't see the colors, green is good. So there is one thing on this earth Utah is better at than us, because they got an A. Wyoming, like Montana, we got a D. And you can see why. Basically, they said Wyoming does not require any financial literacy in its schools at any grade level. So you might take a class that teaches it, but no one has to. That's not good. Okay? And none of our standards really have anything to do with personal finance. So unless you take an elective, like accounting, most kids graduate from Wyoming schools and get a D on financial literacy, like money. Now, here's my question. What's going to help you more in life? Algebra, geometry, chemistry, or knowing how to manage your money? Because I don't care where you move or what job you get or if you go to college or not, you're going to have to know how to manage your money. Okay? So, Wyoming sucks at that. That's the basic conclusion. Now, here's what we're going to do. We're going to use Google Finance to have a contest between now and next Friday when our class ends. You're going to have to cash out and sell. Who has ever played a stock market game or messed around with the stock market? Who is currently in their math class doing that right now? You two guys? Okay, here's what I will tell you. Never take investment advice from a history teacher. Okay, so before I say anything, don't listen to me. I'm not telling you what to do with your real money. Don't go home and tell your parents what they should do with their real money. What we're going to do is play a game with your Aunt Sally's money, which is way more fun than your real money, because some of you are going to lose it all and then some and cry. Okay? So, here's how we get here. If you're logged into your Google account, this little square icon, did you guys use this? Like to switch to Google Drive, Calendar, whatever. Okay? Please use that, because it's handy. And get rid of crap you don't want, like Google Plus is on there. No one uses Google Plus anymore. We want Google Finance, and it's a green little chart, which it's probably not going to show up for you unless you use it. So you can go to More. How do you get them off? You just pull them off. Drag them from up here to the bottom. Now you can also drag some from the bottom up top. So we want Google Finance. Everybody finding that? Okay. Guys, when you hit More, do you see the even more from Google? That's where you want to go. And then if you want to be fast, just Control F, like F-I-N. It looks like it's under Specialized Search. Everybody see Google Finance? It's the green chart. Okay? Here's why I like Google Finance. It's really simple to use, and it's totally free, and all of you have a school Gmail account already, so you don't need to go sign up for some website. I looked at the one you guys are doing. My problem with it is you only get one free account. If you want to open a new portfolio on that site, you have to pay money. And I want you guys to leave here, whether it's for a year or the rest of your life, and say, this is fun, and I'm going to look at it periodically. Okay? I told the other classes that last Sunday night when I was planning out the week, what we're going to do this week, I spent more time playing with Google Finance and investing on Sally's money than I did lesson planning and grading. Like, I played around more than I did schoolwork, okay, because it's that much fun. So, if you get here, your screen should look like this. Here's what we're going to do. On the left side, you have these options. We're going to go to Portfolio, okay? Think of your portfolio just like a hard copy one. You know, you have like the binder with all your assignments in it from the whole semester. That's what you call your collective investments. So in your portfolio, you might have a bunch of different stocks that you've bought or bonds. We're just going to do stocks. Okay? Now, yours probably says none. Can you tell that I use this a lot all the time? I think I have something like 8 portfolios right now. None of these are real money. Okay? I do invest real money, not in the stock market, and we can talk about that later. We're going to go up to the top right and say create new portfolio right here. Now, what to call it? If you take nothing else from this class today, before you invest your money in anything, stock market, savings bonds, here's what you have to ask yourself. What time period am I investing for? Okay, so let me give you an example. I have this portfolio, and it's all mutual funds. Mutual funds are chop up stocks and put them in a bundle so they're less risky. My wife and I said, we're going to live in a schoolhouse for 4 years. It's cheap. It's small, and you get run over going to lunch every day, but it's cheap. Save our money, and then 4 or 5 years from now, roughly, we want that money back to buy a house. So we sat down and said, okay, I want my money back in 4 or 5 years. This isn't like from now to next week I invest, or now till I retire. I need it in about 4 years. So then I said, okay, here's how risky we want to be. If you want your money out tomorrow or next week, that's what we're going to do. You take the risk meter and you crank it up. So we're going to go as risky as humanly possible because it's going to be Aunt Sally's money. If this was your money or your parents' money, quite frankly, you would be an idiot to do what we're going to do. But this is what people were doing up until 1929 during a bull market. Let's buy on the margin. Let's go crazy. Take all your money, put it in the stock market instead of the bank. Okay? So what we're going to call yours is something with the words margin and prospecting. Margin, because we're going to buy on the margin, 10 to 1. Prospecting, because the time period we are investing for is 1 week. The shorter time frame, the more risk. So if you said, I want to invest in the stock market for when I retire, I want this money when I'm 65, you would do the opposite of what we're going to do. And I'll show you that tomorrow. You'd go buy some GE, you'd go buy some Google and some Apple, really safe, huge market cap stocks that won't go bankrupt overnight. Okay? That's for long term. For short term, we want really risky, small market cap, cheap stocks that we're either going to get burned hard or make a lot of money fast. Okay? So does everybody have their portfolio called something with margin prospecting? If you go invest at some point in your life, which you should, the first question you have to ask yourself is what, Riley?
Is it a good idea?
No. That's not the first question. What did I say? Before you give your broker or your financial advisor any money, yes. When do you need your money back? Is this for a house next year? Is this for your kid's college who's 2 right now? Okay, so in about 18 years. So kind of risky, but we don't need it in the near future. Is it for when you retire? 50 years from now. Okay, then we don't need to worry about it. So, our time frame is next Friday. At the end of class, at the 2-minute warning, here's what you will do. Sell everything in your portfolio. Whoever has the most money in their portfolio wins. Very simple. I will also bring a prize for whoever loses the most money.
So you can't sell them.
Oh, you can do whatever you want. I'll explain the rules. So, you have an empty portfolio, and you can see mine has all these numbers. I'll show you how this stuff works. Here's what we're going to do. We're going to deposit cash. So before your broker is going to buy you any shares of any stocks or any mutual funds, you must give him the most liquid asset there is. Liquid meaning anyone will take it. What's the most liquid asset there is in America?
$100.
Cash. Okay, think about your car. Your car is worth something, but can you go to Loaf and Jug and pay with, here's the title to my car? No, they won't take that. They'll take cash, though. So when we talk about an asset being liquid, it means it's easy to use. Get it in and out, okay, like cash. So we're going to add on your deposit, $10,000. Now listen, but you get to buy on a 10-to-1 margin. So I'm your broker today. Your Aunt Sally died. Peace be upon her. She wrote you into her will and said, Corey, my favorite nephew, gets 10 G's. But I'm giving you a once-in-a-lifetime deal because it's 1929 and we're in the midst of a huge bull market. I'll let you invest on a 10-to-1 margin with me, your broker, which means your 10 grand will buy you how much worth of stock? 100 grand. So you're going to deposit $100,000. Now here's the thing. 90,000 of that is mine. That's a loan. That's what buying on the margin means. That's the poker chips for Monday's game. Now, you must put a note to Aunt Sally. Like I think I said on mine. Let me see what I said. I like to put funny things on here. Thanks, Aunt Sally. Sorry you're dead, but glad I was in your will. It's important that we know this is Sally's money because if this was your money, you probably wouldn't want to do this today unless you like to really live on the edge and you just watched Wolf of Wall Street. So you get 100 grand, but remember, it was 10 grand and I let you buy on a 10-to-1 margin. So you're going to get 100 grand worth of stocks with only 10 grand in. Now, you guys should know from the 1920s, is this risky? Are you probably going to go, I'll make a few bucks here and there, no big dips? What's going to happen? One of two things. Boom or bust. You shouldn't come back and say, here's your money back, I didn't really do anything. Some of you are going to be hundreds of thousands of dollars in debt. Some of you might make tens of thousands of dollars between now and when class ends. This is ultra risky. Why are we doing it this way? Because I told you, you would never do this with your real money today. So why the heck do it this way? In the 1920s, in a bull market, is this smart to do? Yes, but it's going to cause a bubble, right? We broke the stock market. Now, you have your cash. You are 100% free to invest it how you would like. Here are the rules. If you haven't looked at the assignment in Canvas, what you have to do is just take a screenshot of your portfolio by the end of class tomorrow that shows that you actually invested your money. Okay? So when I did mine on Sunday night for this class, I just took a screenshot and I put it right here. So it should look like Google Finance to you. Okay? Now I'm going to tell you this. I am not a magician. I have really a couple full-time jobs and none of them include being a stockbroker. So if you think I'll just buy the shares that he bought, good luck. I probably don't know any more than you guys do. Here are the rules. You can buy any stock that is traded on the New York Stock Exchange or what's called over-the-counter bulletin board. Now, the only point of reference I think some of you might have, who has seen the movie Wolf of Wall Street? Okay, basically this guy is a stockbroker, he gets really rich really fast, and he likes to party. That's the synopsis of the movie, but he does it in an illegal way and ends up going to prison. Okay, that guy is alive and out of prison today, and he has a YouTube channel, you should look him up. His YouTube channel is just called The Wolf of Wall Street. Okay, that's how he got rich, was penny stocks. So, let me give you some generic advice before you buy any shares of any company. And if you look at mine, you'll see I'm being honest with you. You want to buy stocks that have a low share price. No, not duh. Because if you want to invest for real life when you retire 50 years from now, this is horrible advice. We're investing for next week, though. So, somebody give me the name of a company that you know. McDonald's. Which, have you guys read about McDonald's stock lately? MCD is their stock symbol. So, in your little search bar up here, you can either type out the whole name of the company, like Under Armour, or if you know their symbol, UA would be Under Armour. Okay, everybody look at McDonald's. MCD, McDonald's Corporation. If you wanted to invest for the long term, McDonald's is a great stock. In fact, if you look recently, okay, this is showing you from Tuesday to Thursday. That's a really zoomed in view of their share price. What is their share price right now? You want to buy one slice of McDonald's ownership, one share. What's it going to cost, Clara? $120. You don't want to touch McDonald's for this portfolio. Here's the deal. You're $100,000, you can't buy that many shares of McDonald's. So the lower the share price, the bigger effect it's going to have on your portfolio value when it goes up. Okay? Another good example is Google. Okay? And here's what you're going to say, whoa, Google's way better than McDonald's because it's worth $738. No, not necessarily. Everybody look up Google, G-O-O-G-L, or G-O-O-G. It'll say Alphabet. They split their company up last year. This is the most valuable company in the United States. Like if you wanted to buy a company and you're like, all right, how much do I need to pay you, Google, to buy you out? It is the most valuable company in the United States. What is its share price? Okay, you don't want to touch that. That's way too big. Here's my advice to you. You want something less than $5 a share so you can buy a lot of shares. That is going to be risky. That's what we want because you only get a week to make money. Okay? How do I know that this is such a huge company? Okay? Here's how we figure that out. If each slice of Google ownership costs over $700, and there are 291 million slices in the pie, multiply those, and that tells you how much the pie is worth. Does anyone know what you would have to cough up to buy Google today? I'll give you a hint. Even if you can't multiply that in your head, do you see the market cap number right here, MKT? That is what Google is worth. You multiply share price times how many shares are out there, that gives you their market capitalization. So the stock market values Google at almost $500 billion. That's $500 billion. That's insane. Now, if you were investing for later in life, Google's a great stock. For us, no go. So how the heck do we find some cheap stocks? Because all the companies you guys know, Nike, American Airlines, Johnson & Johnson, McDonald's, they're all going to be $50, $60 a share. We want $5 a share or less.
Google.
No, we're already in Google. We're in Google Finance. Okay, on the left side, do you guys see this option that says Stock Screener? You can filter out companies based on different variables. Okay? All the companies I've invested for in this portfolio, I had never heard of. I just got on a stock screener and said I want something cheap. So, here's what we want to know. Market cap. How much do you want your company to be worth? Remember, we are prospecting on a 10-to-1 margin. We want to drag this bar down. We want small companies. So this is not an exact science. Take the market cap slider and slide it down somewhere lower. I'm not going to tell you where. Just make it smaller. Now, we want something that's trading for $5 a share or less. So we can hit Add Criteria. And let's go last price. Okay, so let's say on the low end, let's go like 5 cents. So 0.05 to 5.0. Okay, so when you hit Add Criteria, we're just filtering all the stocks there are and say, all right, I want the price to be between $5 and 5 cents. Remember, 5 cents is 0.05, not 0.5. Some of the shares that I've bought in this portfolio were as cheap as like 1.3 cents, I think. So you can buy a ton of penny stocks, literally a penny. Now, here's what's cool. Scroll down. It gives you a huge list of these, and you can filter them however you want. So let's say you want the highest price ones first. They'll say, all right, here's all the ones worth $5. If you want to go to the very end and find the cheapest ones, you hit the double arrow to go to the end. I'm trying to get YouTube famous, and you're killing my vibe by interrupting this. Thank you. If you sit next to Corey, he's the master, and he'll bring you up to speed. Don't give her any stock tips unless she's paying you for them, though. Okay? Now listen, here's what we want to do. The basic rule of how to make money in the stock market can be explained in 4 simple words. Do you know these words, Corey? How do you actually make money in the stock market? Okay, I get it. You put money in there, graphs and charts, do stuff. How do you make money? Buy low, sell high. That's simple. When you sell your shares of whatever you buy by next Friday, you want them to be higher than they were today when you bought them. You can do as many trades as you want. You have $100,000 to invest. Every time you sell your stock, you're going to have to go to your portfolio, and down at the bottom where it says add symbol, you're going to do transaction data and type in, I'm buying on this day, this many shares at this price. Okay, here's my deal to you as your broker. I'm the best broker on Wall Street. I'm going to let you invest on a 10-to-1 margin, so you get $100,000. You do not have to pay a commission on any of your trades today. But after today, every time you hit buy or sell, you owe me $8. Now, a good rate, if like your parents have a stockbroker, most of them charge like $8, $10, $12 a trade, because they're giving you their info. So you're like, hey, stockbroker McKelkey, here's $100,000. And I go, oh, I know the good stocks. Well, every time I hit buy or sell, you got to pay me a little fee for my services. That's how I make money. Okay? So today, you do not have to pay a commission. After today, every trade you make, okay, like on mine, I made some trades today. I was paying $8 commissions on all of these, so you know I'm not cheating. If you cheat, okay, first of all, we're going to send you to the gulag and give you some hard labor. We're just going to look at your transaction history, and it tells me, were you being honest about what you sold and when, and did you pay your $8 commission? $8 commissions will not make or break you when you have $100,000 to invest. You can buy and sell as many times as you want between now and next Friday. So I came in yesterday and I sold all of my shares because I was up like $14,000 yesterday. And I said, all right, sell everything. And then I'm going to start over. This morning I came in at 7:30 and I found some new companies and went back and I said, all right, I want to get, see how many shares. 150,000 shares of this company. It was 13 cents a share. I could buy a lot of them. 200,000 shares of this company. And so far today, I'm down a little bit. Not bad though. Okay? So here's my advice. Use the stock screener to find some stocks that are between $5 a share price and a couple cents. You can go as low as you want. The lower you go, the more you can buy and the riskier they are. We are going ultra risky. Okay. Commission is free today, and after today it's $8. Okay. Do you guys want a stock tip? Let's do one together. Okay? I'll tell you when you're doing this, you're going to end up with a bunch of tabs open if you're doing it right. Everybody go to their portfolio. Just so you see how to do this, we're going to buy 10 shares, which is very, very small. 10 shares of a company that I bought that's doing really well today. It's made me about $13,000 since you guys have been in class today. Okay? So everybody go to your portfolio. Do we see at the bottom where it says add symbol? We have to do transaction data. You have to tell it how many shares, at what price, etc. Okay? So here's your symbol. AMDA. America Corporation. These guys are based in Salt Lake City, and their stock price is doing well today. So we're going to buy 10 shares of America Corporation. So type in AMDA, and it should pop up America Corporation, right? Now, there's a little symbol in front of it, AMDA. Do you see how that says NASDAQ on the side? That's the exchange that it's traded on. Because here's what people say. I love Samsung phones. I want to buy some Samsung. First of all, their share price is way too high. Second of all, they're traded on the South Korean stock market. No foreign stocks. So, New York Stock Exchange, that's NYSE, NASDAQ, or over-the-counter bulletin board, which is OTCBB. Okay, so like Tim Heber, he came in, he's like, oh, the Frankfurt Exchange, no German stocks. Okay, because like German companies like Adidas are traded in their own home country. Now, the date, it should know it's today. Make sure it knows we're going to buy. That's the default. So when you want to sell later, you got to switch that. Okay, now, here's how many shares we're going to buy. We're going to buy 10 shares. Of course, you can buy as many or as few as you want later. We're doing one together. I won't charge you a commission, so this won't cost you money if you want to undo it later. Let's buy 10 shares of AMDA. So type in for shares 10. 10. Did you hit add transaction data? Now you have to look and say, what is the price right now? It's $2.58. Is that in our range of 5 cents to $5? Now, with 100 grand, you could buy a lot of shares of this stock. But here's the problem. Do not go Trevor Wilcox style. And by that I mean, dump all your money in one stock. Because here's the deal, guys. If it goes down, you're screwed. If it goes up, yes, you'll hit a home run. You need to diversify. What does that mean, Corey? Spread out your money. So look at this. I have 6 or 7 different ones that I have considerable numbers of shares in. That means if one goes down, it doesn't kill me. If you were investing for real life, you would never put all your money in one stock. That's really risky. You spread it out. So we're going to buy 10 shares for $2.58. Do you have to pay me a commission today? No, I'm the best stockbroker ever. You get free trades today. As many trades as you want today, no commission. After today, you must pay $8. Question?
Can you buy them over 5, or is it not a rule?
No, listen, that's my advice. If you want to go against your stockbroker's advice, that's totally up to you. Now, notes, that's just like if you want to tell yourself, test buy or something. When I buy, I always say roll the dice. And when I cash out and made money, I always say cha-ching to myself. I don't care what you put on there. So buy 10 shares of that for $2.58. Okay? And then you just hit add to portfolio. Here's what that did. It took $25 out of your portfolio, that cash you put in, and said instead of the cash, stockbroker, go get me 10 shares of that stock. Anyone having a problem with your transaction data? Did you put cash in? Did you buy stocks yet? Well, you can't buy more than 100 grand worth. So you bought 151 grand worth of stocks. You can't do that. Guys, you only gave me 10 grand. I'm already giving you a great deal and letting you buy in a 10-to-1 margin. That's why we said, and this is why I like Google Finance, if Tatum comes up in here on Friday and says, I made $5 million, I'm going to say, cool story, bro. Show me your transaction history. And I can see if you were cheating or made a mistake. Sell $50,000 worth and get down to 100 because you're cheating right now. Everybody's on Sally gave us the same amount of money. We have 100 grand. So here's my advice. Share price from $5 down to about 5 cents. The smaller the share price, the more you can buy and the more risky it is. You cannot spend more money than you have in your portfolio. The basic premise here, buy low, sell high. The stock screener is your friend.
I don't know if I'm this is my master.
What are you confused by?
It says last price and it's negative 51,000. But it says
For a share price?
no. I don't know.
Now, there are lots of different websites with investment advice. If you want penny stocks, here's what penny stocks are. They're the opposite of Google. They're really small companies with a really low market cap, like a couple $1 million, whereas Google's 500 billion. If you want to go find some penny stocks, remember the only exchanges you can buy on, NASDAQ, New York Stock Exchange, and then OTC Bulletin Board. If you go to otcmarkets.com, you can use their stock screener and that's where I went to find my penny stocks. Penny stocks are not literally a penny. They're just cheap, small stocks that are really risky. If you watch The Wolf of Wall Street, that's how they make their money, is they sell schmucks penny stocks.